Let's go. Good morning, good afternoon, and good evening, wherever you are. It's good to be back with you. I hope you are doing well. You can listen to and watch me on Rumble and YouTube, and you can follow me on X, the platform formerly known as Twitter. Please like, share, and subscribe because it does feed the AI algorithm. And lastly, please post your comments and questions below. It would be wonderful to hear from you. It's great to be back with you for this new episode. And let's jump right into it, as always. This article from the Motley Fool. If you're not familiar with the Motley Fool, it's a financial publication, like Morning Star. I recommend both for stocks and happenings in the marketplace, especially now with the emergence of AI and AI technologies, which is obviously diversifying the marketplace. They not only talk about AI and technology, but they talk about other traditional stocks, energy stocks, uh, other stocks and companies in the marketplace. So, yeah, highly recommend. From title of the article is prediction to artificial intelligence AI stocks that will be worth more than Nvidia by 2028. That's saying a lot, but there are a lot of giants currently right now in the marketplace, like there always have been here in the United States. And so it wouldn't be unreasonable for other companies uh, to surpass NVIDIA, but we'll see how it turns out. That would be just about 3.5 years away. This article by Trevor Ginenwine, and it was actually published early this morning. Uh, if you're listening to this, let's say on Monday, which this will be published, I do pre-record these videos. So I generally try not to mention what day I'm currently recording these, but sometimes it happens, it slips out. It's early in the morning. Anyways, key points of the article. NVIDIA is currently worth $2.7 trillion, but Amazon and Alphabet could be worth more by 2028. That's not unreasonable, considering Alphabet, parent company of Google, its size and reach, and the technology it is developing itself, and then, of course, Amazon with its subsidiary AWS, which is the cash cow of Amazon. That's where Amazon makes a lot of its money. Let's see here. Key point 2, Amazon is monetizing artificial intelligence across its e-commerce, advertising, and cloud computing businesses. Yeah, cloud computing, AWS, if you're not familiar with that. Cloud infrastructure business. Hold on a second, drink some coffee. And the third point, Alphabet is using artificial intelligence to strengthen its position, the advertising and cloud computing. Oh, well, markets. I spell check its position in the advertising and cloud computing markets. That's what I should say. See that quite a bit. Should reread your articles, whoever writes these. Article starts here. Chipmaker Nvidia is currently worth 2.7 billion, but Amazon and Alphabet could be worth more by 2028. So rehashing what we've just previously discussed. Nvidia on the Nasdaq NVDA shares have soared 650% since January 2023. Consequently, its market capitalization has jumped from 360 billion to 2.7 trillion in less than 2 years. That's quite a jump. And I imagine large majority of that has to do with the GPUs. Demand for artificial intelligence, AI systems, was the driving force behind the price appreciation. Yeah. So AI on top of GPU. Uh, if you don't know, machine learning is its power is CPUs, or it's the way it's driven. I'm trying not to be too technical about it. It's probably a terrible way to explain it. And GPUs are its power sources, or AI its power sources GPUs. So when you think of machine learning, just think of CPUs. When you think of AI, think of GPUs. Let's see here, Amazon. And Alpha 101 point, what's it down to say it? 1.61% in Alphabet. Google 0.23% are currently worth 1.8 trillion and 2.2 trillion respectively. Yeah, so looks like Google is closer to Nvidia than Amazon, but um, we'll see what how I my feeling is if Amazon's going to jump both companies, it's going to be through AWS and some of the internal rearrangement of technologies and human capital. And I'll talk about that here in a little bit um, when I go over my 3 points at the end of the video. Uh, Article continues here. However, both companies could eclipse NVIDIA's current valuation within 4 years, meaning they could be worth at least 2.8 trillion by mid 2028. Here are the important details. Yeah, there's some graphs you can look at later here. Gets into some stats, key data points about the market. Number one, Amazon. Amazon reported stellar financial results in the first quarter, beating expectations on the top and bottom lines. Revenue increased 13% to 143 billion as advertising and cloud computing sales accelerated. Yeah, the advertising part would come via the Amazon marketplace. So you go on Amazon, you buy a shirt, you buy a keyboard, you buy a mouse pad, something like that. That was originally, if you read the Everything Store, which I highly recommend. I think that's becoming a theme here on this show, which is in each episode where I end up recommending a book of some type. But yeah, the Everything Store, which gets into Jeff Bezos. It's about Jeff Bezos and how he came up with Amazon. And you get a little bit of history about Jeff as well. Anyway, originally when he built he built Amazon, it was just supposed to be a bookstore that competed with Barnes and Noble and other brick and mortar bookstores. And now Amazon today is, books are a part of Amazon now. It's not Amazon. It's a little part of it. Amazon has all these other things going on. And of course, what ended up happening as to sell books, that environment ended up becoming its own little market where supply and demand exists, which is pretty interesting. And people look for the best product for the lowest price. And you think about it, it's really what it is. It's a little capitalist market without much government overreach or government input. It's pretty amazing, and it works really, really well. And it's always astonished me. I don't think Jeff intended it for that to happen, but it happened. And another thing you'll learn in the book is he studied electrical engineering at Princeton, so he's an engineering by training. Anyways, little side notes there. Article continues here. Oh well, let me step back real quick. So advertising in that marketplace inside Amazon, and then of course cloud computing, that's inside AWS, and that's not going to get smaller. That's going to continue to grow. and Amazon has a large share of the computing market. I believe it's 75, 80% compared to Microsoft's Azure and Google's cloud computing services. And Google does as well. Right? Google is not just uh, a search engine anymore. There's other things going on with Google as well. Uh, they have their own internal R&D, research and development of technologies, and they have large server farms just like Amazon does and Microsoft. Anyway, continue here. The article continues. Meanwhile, generally accepted accounting principles, net income tripled to reach 98 cents per diluted share. Investors have good reason to think that momentum will continue. Continue on here to the next paragraph. The investment thesis for Amazon centers on its strong presence in e-commerce, digital advertising, and cloud computing. Markets projected to expand at annual rates of 11%, 15%, and 21%, respectively. Yes, I would expect cloud computing to increase at a higher rate than digital advertising and e-commerce. And this is through 2030. Amazon runs the most visited online marketplace in the world, and its cloud and retail has evolved into robust digital advertising business. Specifically, Amazon is the largest retail advertiser in the US and the third largest ad tech company worldwide. Now, in my previous videos, I've talked about mathematics education quite a bit, a little bit of computer science. I'm going to grab some coffee here. And I've also stated that AI is going to, I believe it was in the previous episode, where I talked about the different technological revolutions. And through each revolution, jobs were destroyed and new jobs were created. And of course, I think one thing I left out was wealth increases as we go through every technological revolution. So the pattern is jobs are destroyed, but there are a lot more jobs that are created. So the market, as far as jobs, number of jobs actually increases and wealth increases through each iteration. If you want to call those technological revolutions, technological iterations for human civilization, that's the trend I'm seeing. I believe that's what the data illustrates. And so, connecting the tissue of, or connecting the dots of, mathematics, science, computer science education, software engineering, electrical engineering, to what we're talking about here with AI and markets, well, we're going to need more engineers, right? If the cloud computing market is expanding for Amazon, they're going to need not just more technical positions, but support positions as well. Now, the support positions might decrease and the technical positions might increase, but they're still going to need more. Amazon's going to attempt to be as efficient as possible and decrease their costs, but they're still going to need support, because probably what will happen is the number of teams will increase, and those teams are going to need support, right? The market's going to diversify, and I really don't hear anybody talking about it like this, providing it with economics context, market dynamics. How do markets actually work? What's the history of markets? Things like that. Anyway, we'll obviously I'll talk more about that because I've talked about that quite a bit on this channel. Article continues here. Amazon is using artificial intelligence, AI, to increase revenue and boost efficiency across its e-commerce and advertising businesses. Yes, it'll also do that in cloud computing. It'll use AI to create efficiencies there. And of course, in a previous article about oil and gas, I talked about how artificial intelligence was actually making that more efficient as well. I believe oil companies, instead of just oiling randomly, AI is actually not that this randomly and they're just kind of like poking a stick in the ground trying to figure it out. I'm pretty sure they have an efficient system now where to dig and not dig, but AI will make that process even more efficient, and that'll save those companies money. And by the way, that'll decrease uh, the amount of energy they need to use, and that's a good thing. Again, it's more efficient. Uh, let's see here. Article continues here. For instance, machine learning models optimize warehouse inventory. Bingo. And last mile delivery routes, and a new generative AI tool helps brands create marketing content in a cost-effective manner. Amazon has also shifted to multiple regional fulfillment networks rather than one centralized network, and introduced ads on Prime Video. Uh, those changes are not strictly related to AI, but they should boost profitability. Yeah, Amazon's doing a lot of things in order to increase efficiency across their networks and their different teams and companies, or not companies, but fulfillment centers, support centers, so on and so forth. Uh, Meanwhile, Amazon Web Services is the largest provider of cloud infrastructure. I just mentioned that, and platform services. The company lost a percentage point of market share over the last year, but it remains well positioned to benefit from AI. Yeah, and that's because Azure from Microsoft and then Google itself, they're also increasing their market share, but the market's also getting bigger. So those are relative frequency numbers. Let's see here. Article continues. Public clouds are the most cost efficient way for businesses to get the computing power needed to build and run AI applications. Yeah, there's a whole thing to that I won't get into, but yes, that's true. So AWS has a significant advantage in its market leadership. Yes, it does. It was the first and it's the biggest. Although Google might have been working on it back then as well, I believe. But AWS was first to market, so technically they would be the oldest. Uh, However, the company has also expanded its portfolio with new products like Amazon Bedrock. I'm gonna have to look more into that. Uh, let's see here. Going forward, Wall Street expects Amazon to grow sales at 10.9% annually over the next 5 years, and reasonable estimate given how quickly its major markets are projected to grow, assuming Wall Street is correct. The stock could achieve a market capitalization of 2.8 trillion within 4 years if shares trade at 3.1 times sales in mid 2028. That seems reasonable given the shares currently trade at 3.2 times sales. Yeah, if that trend continues, yes, then yes, that would happen. Well, what would that mean for investors if Amazon is worth 2.8 trillion in mid 2028? Shareholders will see annual returns of approximately 11.6% from its current market capitalization of 1.8 trillion. Those gains would probably beat the S&P 500, given that the index has compounded at 10% annually, more or less, over long periods. I'm going to grab some coffee. No matter what, the trend's going to be up for Amazon. And again, this is assuming that, so they have their market within Amazon, e-commerce, digital advertising, and then of course they have AWS. This doesn't take into account Amazon building a new company, like AWS, a subsidiary of Amazon. It's kind of its own company, but it's obviously associated with Amazon. This doesn't account for what if some new thing ends up emerging inside Amazon or inside AWS, right? If that happens, then these numbers are going to be small. And that's just not predictable. Those types of things aren't predictable. So this assumes this stays the same, right? Or rather, these trends continue to increase. All right, so here we go. Some more stuff. Google and S&P. Excuse me. Two, Alphabet. Alphabet looked strong in the first quarter. Revenue increased 15% to 80.5 billion due to especially strong sales growth in Google Cloud. I mentioned Google Cloud a couple times, and modest sales growth in Google advertising. So yeah, Amazon and Google are competing in those two. Well, I would say probably so if it's e-commerce. I think Google does e-commerce, but at least those two markets with cloud and advertising, digital advertising. Meanwhile, net income jumped 61% to $1.89 per diluted share as the company continued to focus on expense management. We'll just continue with the article here. The investment thesis for Alphabet centers on its strong presence in digital advertising and cloud computing, with markets forecast to grow at annual rates of 15 and 21%, respectively. So it looks like Google and Amazon regarding, so it looks like they're, as far as digital advertising and cloud computing is concerned, both companies are growing at about the same rates in the same areas. Alphabet is the largest ad tech company in the world, due in large part to its dominance in internet search, right? So those are the differences between Amazon and Google. You know, Google is a search engine. Amazon does have a search engine in its marketplace, but that is embedded within the Amazon.com website. So there's obviously some differences there in the business models, how they make money. Article continues. Alphabet is experimenting with generative AI to fortify that dominance. For instance, CEO Sundar Pichai says recently launched AI overviews are boosting Google search usage and user satisfaction. Similarly, Google Cloud is the third largest provider of cloud infrastructure and platform services. Yes, after Amazon and Microsoft. But the company gained a percentage point of market share over the past year, and its recent launch of Gemini could sustain that momentum. Gemini is a multimodal AI model, meaning it can be prompted with text, images, and video and other media. That's interesting. That Google Cloud customers can use to build generative AI applications. Of course, and if you've been watching episode to episode here on this channel, you might have noticed with the most recent article or more recent article, I used a for Elon Musk getting $6 billion of investment from outside interest or investors. Although that sounds kind of redundant. That episode has that photo is deep AI. So I've been playing around more with creating thumbnails using artificial intelligence. Another previous episode dealing with AI in the restaurant industry. That was my first attempt at a thumbnail using artificial intelligence, and that was also through deep AI. And then, of course, as I continue, I will play with other or explore, experiment with other AI systems as well. And the reason why I do that, like in the case of Elon Musk, sometimes it's hard to find a thumbnail for an episode, and the reason why is because there are limits and constraints on photos of let's say famous people. So like if photographer takes a picture of Elon and that photographer sells it to the Associated Press, well, I I can't use that because the Associated Press purchased that photo. Now they have rights to it. So it has to do with rights. But artificial intelligence, deep AI, in this case using deep AI, that gives you a loophole. And so expect to see that more on this channel, incorporating AI stuff. And this is, yeah, just for all intents and purposes, the focus now is really AI type stuff and everything related to AI. Although I will do episodes on mathematics education, science and engineering education every so often. I at least read about how terribly American students are doing. Some are doing well, but most are probably not, at least from the data I've seen. So let's continue here with the article. Going forward, Wall Street expects Alphabet to grow sales at 10.5% annually over the next 5 years. A reasonable estimate, perhaps a little low, given how quickly its major markets are projected to expand. Assuming Wall Street is correct, the company could achieve a 2.8 trillion market capitalization within 4 years if shares trade at 5.9 times sales in mid 2028. I believe Amazon was 3.2 times. And so Amazon has a shorter distance to go, looks like, than Google, but not unreasonable considering the size and market share of both companies. Article continues here. That seems easily done since shares currently trade at 7.1 times sales. Yeah, it seems easy as long as that trend continues. Key factor is the trend needs to continue. And that doesn't account for, let's say, again, to be fair to Google, Google comes up with a new piece of technology, like I said with Amazon, and in this case Google, and it's AI, right? So now they have another part of the company, not just cloud computing and digital advertising, but they have some sort of AI service. Now these numbers would go up quite a bit, right? So this analysis doesn't take that into account. It doesn't also account for outside, forces, wars, things like that, internal political turmoil. Right. This is assuming everything stays kosher. Let's see here. This article continues. What would that mean for investors? If Alphabet is worth 2.8 trillion in mid 2028, shareholders will see annual returns just north of 6% from its current market capitalization of 2.2 trillion. Those gains would probably underperform the S&P 500. That said, and this is the person writing in first person, I believe Alphabet will be worth more than 2.8 trillion in 4 years. And I expect that stock to beat the market between now and then. I would probably agree with that. I don't see any reason why that wouldn't happen. Again, other than the previous things I mentioned. Should you invest $1,000 in Amazon right now? I am not a financial advisor. This is not a show about investing in stocks. I am just using this article in order to illustrate uh, the implementation of AI into different areas of our society. I've talked about oil and gas. I've talked about education. There is an article I'm still planning on talking about data centers and energy. Um, alternative energies, greenhouse energies. Um, yeah, if there's an article on AI and policy, I'll talk about it. There's AI and economics, AI and education. I think I already talked about that. And I will continue to talk about these things. AI engineering or AI in engineering, different fields. And this is more of a way I explore this stuff myself as an engineer, and just so the listener knows, I have undergrad in mathematics. I have graduate degree in engineering. I won't say which one specifically, and I'm actually continuing on with another one, another graduate degree in engineering. I won't say which one that is or what level that's at. But anyway, I think part of a good exercise for an engineer is to be able to one do something like this, which is what engineers normally don't do. Right, I get better. I believe I get better every episode as I do this. I get more comfortable with it, and this provides me an opportunity to be able to explore different engineering technologies, science and math, through the overarching idea of artificial intelligence in the marketplace. Uh, so I think this makes me a better, well-rounded engineer myself. Not just going to work 8 or 9, 10 hours a day, sometimes 12 hours a day. Sometimes we've been pulling all-nighters. But it's well worth it. Anyway, so here, okay, so the article's asking. Anyways, I'm just kind of trying to add context to this article here for why I do things. Anyway, should you invest $1,000 in Amazon right now? I'm not going to lie, I've thought about it. Before you buy stock in Amazon, consider this. It's probably going to be good. Motley Fool stock advisor and analyst team just identified what we believe are the 10 best stocks for investors to buy now, and Amazon wasn't one of them. That's interesting. The 10 stocks made the cut could produce monster returns in the coming years. A little bit of hyperbole there. Monster returns. Consider when NVIDIA made this list on April 15, 2005. You invested $1,000 at the time of our recommendation. You'd have $671,728. That's not a bad investment. So, NSA here, at article ends, you can see stock advisor members who bought and held our recommendation have been handsomely rewarded. Don't miss out on the latest 10 top list. All right. Well, I'm not going to get into that. That's not what this is about. But I will get into my three final points, and I'll do this. Not sure if I'm going to continue this with every episode, but probably start doing this and see how it goes. So, obviously, the article talked about AI stocks increase wealth. So here's my first point. I have 3 points about this. First point: AI is not going to change. It is not only going to change the composition and size of our markets, as I've talked about in previous episodes, but it's going to increase wealth in society and lift millions of people out of poverty. Just and of course, this has happened in each technological revolution to a degree. And in more recent technological revolutions, technological innovations, industrial revolution, the industrial revolution, computer revolution, information revolution, it is increased. A larger percentage of the populace has moved them out of poverty. I believe the statistic is since 1820, the poverty rate in 1820 was 90%, and today it's 10% globally. Just to give you an idea. Second point: Amazon laid off tens of thousands of workers last year. I have a previous episode. I'll put that here at the end of this episode. It's one of my first episodes where I actually talk about Amazon. But Amazon continues to hire and promote and educate from within, which I also talk about in that episode. Right. So that it looked like they were laying off people in HR. They probably laid off a few technical positions, and a matter of fact, I do know of 2 people who were laid off that were engineers. But the vast majority of those were non-technical positions. And so you should ask yourself the question, why? And here's another thing to add to that. So I said they're continuing to hire and promote and educate from within. They're continuing to hire people. And regarding hiring from within, they have programs, which I've also talked about in that previous episode, where one of them is mechatronics technician. So if you, let's say you work in a fulfillment center for Amazon, you can get into that program and become a and go through that. I can't remember how long that program is, but once you graduate, you'll become a mechatronics technician. I know on my job, I interact with engineering technicians all the time. I've interacted with actually in the same day, I've interacted with engineering technicians in R&D, and I've dealt with engineering technicians on the production line. So they're going to be technicians throughout the entire engineering development process. And so what does this mean? It means Amazon's reallocating its resources. So clearly Amazon's making money, as what we just previously talked about over the last 35 minutes. And so the dumb analysis would be, oh well, they're just cutting they're firing people, laying people off so the CEOs can make more money. That's not what's happening. What's happening is Amazon is reallocating their resources because they understand the market's changing. AI is a new technology. And so their workforce is going to have to change. Some of the workforce will remain the same, some of it will change. Some of the positions they'll have to learn new skill sets in addition to the current skill set they already have. So it's not so simple. It's just, oh, they cut money and the CEOs make more money. Maybe the CEOs making more money, but that's not the interesting part. The interesting part is Amazon's continuing to grow. They're just reallocating their human capital. Their business model is changing. That's what's happening. Last point 3. The battle begins, obviously. New AI companies will emerge. We've seen that with OpenAI, ChatGPT, XAI, Grok, if you want to consider that a new company, separate from Twitter, even though Twitter uses it. And of course, some current companies will transition to AI. Amazon, we just talked about. Google, we just talked about. And there's historical examples of that in American markets. The most notable being Standard Oil, which was John D. Rockefeller's company. Originally, they provided lamp oil. That's the company that originally lit American homes in the late 19th century. And John D. Rockefeller that company ended up becoming a monopoly. But at about the same time it was becoming a monopoly, Henry Ford started building his cars, the Model T Ford, and the Standard Oil was broken up into 70 some different companies, and those companies transitioned from lamp oil to fossil fuels and petroleum products. What would be petroleum products today? And the 5 of the 6 major oil companies in the world are Standard Oil companies. What do I mean by that? There are 5 companies who were originally part of the 70 some companies that were broken up by the United States government. And they transitioned to newer technologies. And they're going to, you just haven't read about it yet, but they're going to transition to AI. They're going to incorporate AI in their energy business model, because they're energy companies. That's what they are. People call them oil and gas, but really what they are is they're energy companies. And if there's an energy, energy that's worthwhile that they think they'll make money off of, they're going to move to it. Which is why you haven't seen them move to alternative energies yet, because they don't see the value in that. They're not going to make They're not going to decrease their revenues to move to that. They'll optimize their technologies, but they're not going to move to something that's not going to make them money. That's not the incentive. That's not how the world works. People don't operate like that. It's not magic. There are no unicorns. People make decisions based off of incentives and trade offs. Thomas Sowell is correct on this point. So, anyway, those are my 3 points to end this video. I hope you enjoyed this. I know this was more financial, more technical, and more informative. There are things I'm trying not to do, but I know I get less listeners, and it'll take me a while to find an audience, probably. Although I've seen more people commenting. I appreciate your comments. I've seen more people watching, both on YouTube and Rumble. I appreciate your viewership. I really do. And always feel free to reach out. Always feel free to comment. I'd love to hear from you. And that's all I got for today. Hope you are doing well, no matter where you are. And if I can find my mouse here, I will see you in the next episode. Bye for now.